What up traders, I am Agbosan Odi, the liquidity king, and the AED is the sniper trader back on your screen. And in today's video I'm going to be talking about one of the technical tools that I use to make trading decision, trading market structure, and that is technical, or that is Fibonacci tool, right? So now, what Fibonacci tool is more or less of a technical tools that show us specific levels on the market where price would tap in and go and change direction, right? So now you need to understand that we have three major market structure in this market, which is an uptrend, right? We have an uptrend, we have a downtrend, and we have a sideways market, right? So an uptrend is a market for buyers, right? A downtrend is a market for sellers, and a sideways market is an equilibrium market. Buyer and seller, none is in control, right? So these are the major markets we traders look on the price chart to make informed decision. And in this market we also have specific way that price move, right? In an uptrend, price creates an impulsive move and create a correction move, create an impulsive move, create a correction move, create an impulsive move, create a correction move, and create an impulsive move again. Now understand that in an uptrend, what do you want to see market doing? Creating a high and a low, right? Then price will have to trade back and take out previous high, right, to create a new high, right, and come back and create a new lower low, right? So this will be considered as a break of structure. Then the cycle continue again. Price will now trade back to take out the recent high and create another recent low. So this is simply how we traders look at the market. And the same thing for downtrend, right? So price creates lower low and trade back down and take out that low. So in a downtrend, what do we want to see? Price taking out recent lows, right, and creating lower highs, right, as you can see. So this is how the cycle continue in a downtrend. Now understand that in this market there are two major participants, which are buyers and sellers, and these buyers and sellers interact with themselves. There are negotiation that goes on in certain price points. So now if we're trading market structure, we don't just buy or sell randomly in an uptrend, likewise a downtrend, right? We don't just buy and sell randomly. So now let's say if market is trading up and we clearly see an impulsive move. Now the question we need to ask ourselves is, where does the pullback or the correction move start and where will it end, right? So now if we can see the pullback coming in, now the Fibonacci tool tells us that at certain price ranges using the Fib tool levels, market might likely get there and buyers will step in again to cause an impulsive move, right? Please stay closely with me and pay close attention, right? So that is what Fibonacci tool is all about, right? So Fibonacci tools help us to map out certain levels after price have created an impulsive move, using the tool to connect our swing low to a swing high in our uptrend, or a swing high to a swing low on a downtrend. And we look at these certain levels on the Fibonacci tool that makes that price would likely get to and continue creating an impulsive move. So now with that said, if you want to know where Fibonacci tool is, right, all you just have to do is all you have to do is to come to this point right here. As you come to this point, you see it, the fib retracement, right? This fib retracement is the tool. So all you just have to do is to click it, and once you click it, you can click and drag, right? Now, in most cases, mine is customized, but in most cases, it's not like this, right? You might see a lot of numbers, but for my interest, I use the 0.236 level, the 0.382 level, and I use 0.5 level, and I will also use 0.618, right? And I also use 0.7 in most cases. So now this is how the tool is. So now if you want to customize this tool, you can actually come here and click setting, and this is how we have the style, coordinate, and visibility, right? So you can actually tweak the numbers to whatever numbers you want to be looking at taking trades, right? Now always remember, like I stated earlier, the fib tool help us to know when a retracement phase or a pullback or a correction phase is going to end, right? So we look at specific price point that the fib tool price ranges that the fib tool shows, right? And at those levels we use them to track how price would react when it comes to that level, and knowing that there's a likelihood that at this price point, what's it called, the reversal or the correction move is going to likely end. So we start looking for buys at that point. If the market structure is bullish, then if the market structure is bearish, we start looking for sales. So now let's use this as a clear example, right? Okay, so now let's say we have how to use the Fibonacci in trend, right? So if the market is trading up, right? For example, if the market is trading up like this, we use the Fibonacci tool by connecting in an uptrend from swing low to swing high, right? Now we connect in an uptrend the Fibonacci tool from swing low to our swing high. Now if we connect it to our swing high, what we simply do now is we look at these price ranges. Like you can see, we have 0.382 and 0.5, right, and 618. Now this is the swing high of this market, and this is the swing low. Remember, we use Fibonacci to track where pullback is likely going to end, and we join in on the buys, right? So you can see now, if market traded up below 618, then it tells you that you are more or less of a discount price, right, where buyers will likely get involved. Then we simply now start looking of how price will react around these zones, right? And if we look for candlestick confirmations that in turn tell us that price is showing bullish intent, then we just simply join in for the buy. So now let's say price create an impulsive move, which is a bullish market, right, for this scenario. Now once you start seeing pullback coming in, what you simply do is you connect your fib level from your swing high to your swing low. Now you want to be looking at these levels. When price get there, how does it react, right? So now that's simply what it is. So if price comes to this level and you start seeing bullish intent, then there's a likelihood that price will go create a new high and the cycle start again. Now we have a swing low, and what do we want to do? Any price point that price start trading below, right, that price start trading, making retracements. Now what will we do again? We connect our Fibonacci from our swing low to that high that price creates. then we start looking at our Fibonacci levels. If price gets to, how does it react here? If it gets to here, how does it react? And if it gets to here, how does it react? And if we see candle printing bullish momentum, remember price creates lower highs, higher highs and higher lows in an uptrend, right? And this is a low, right? Now observe that price is trying to create a new lower low, and we want to be in the impulse move section, right? So now if we see a bullish intent, then we simply look for buys targeting the high, right? Because highs are the target for an uptrend, and likewise the same thing for downtrends, right? So let's use this. Let's do a scenario for a bearish market. So now let's say we can clearly, let's say we clearly see a market like this, right? Now we know that we had a swing high and we have a swing low, which market just broke structure showing bullish intent. Now we know we have another swing high. Now what we simply do is wait for price to create a retracement. Now this will be considered to be our swing low. Then what we simply do is we connect our Fibonacci from point A, from the swing high down to the swing low. Now what do? Now we start looking at this Fibonacci level, right? We start looking at these Fibonacci levels right here, how price will react when price trade up to that point. Now if it gets to the 0.618 or 0.618, then we start seeing bullish intent, then we join the buys around there. And likewise the same thing again, if the circle continues after breaking structure, remember we only validate a swing low or swing high after price breaks structure. So now we have established a swing high simply because this high led to the break of this low, right? Then when the pullback start coming in, what we do now, we've established a swing low. Then what we do again, we connect our Fibonacci from our swing high to our swing low, and we start looking on how price reacts when it comes to these Fib ranges, right? And we look for our entries around there. Now we all said, let's go to the chart and look for typical example of how these things plays out for you, right? So this is GBP JPY. I'm going to be using GBP JPY for an illustration. So okay, what can we see? We can clearly see that this market created this low, created this high, and later price went above. Now if we were trading with our Fibonacci tool, now we can tell that we are in a bullish market, right? And can you see this pullback? Right, now let's connect our Fibonacci tool from this swing high to this swing low and see at what Fibonacci level price traded up to. Can you see that price traded up to the 0.618 zone? And as you can see, price traded up and played around and broke structure. So if we were trading at the 618 level, because why price made it a key level, you can see a rejection here, you can see multiple rejection here. So using that as confluence would have helped us take a trade, right? Now let's look for more examples, right? Still trading the structure line, right? Now we've established what? A swing low here, which is this point. We've established another swing low, and this is our swing high, right? Because this low broke this structure right here. So now let's see when the pullback comes in again, how it will react, which is this point, right? Can you see that when the pullback came in again, it traded up to this range, which is a fib range, right? That is 0.236. And can you see how it traded up? It came back to retest that 0.26 0.36 range, and can you see how price traded up again, to tell you that Fibonacci zones are very strong zones, right? And let's look for more examples. So now what do we have again? A swing low and we have a swing high. Now can you see that when price traded and broke that swing high, what do? We connect our Fibonacci tool from the swing low to wherever price start pulling back from. Alright, remember we use Fibonacci tool to track retracement phase. So now can you see that when price start pulling back, it came back to that 0.618 zone, tapping to this 0.7 something zone. These are golden zones, right? And as you can see, what did you see again? Price traded and broke structure again, although it did not break structure immediately. So can you see that just with Fibonacci 2, it will help you to spot places that pullbacks are ending, right? Key zones, key fib zones that pull back, or buyers might likely jump in the market and push price higher. So this is what Fibonacci is all about, right? You can go backtest this, trading it with market structure, right? Remember, we use Fibonacci to determine points where retracement will end, either in a bullish market or a bearish market, to join in the impulse move, be it buyer's market or seller's market, right? Yeah, and if you found value from this video, kindly like, share, subscribe, and hit the notification bell to get notified whenever I drop trading related content like this. And also in the description box below, you will see the link to join my free Telegram channel, where I post trade signals and ideas building the biggest trading community in Africa. And please backtest all these things. Take your time and dissect the information here before trading it on a live account, right? And I'll see you on the other side of profitability. Peace out.